The stock market just hit an all-time new high, and people are saying cracks are starting to form. It's time to sell. It's time to get out. And the problem is that when the market's way up, people say it's not a good time to invest. And then when the market drops 10%, when we experience a correction, they say, oh, don't invest now. Times are bad. You don't know what's going to happen. So let me show you some of what the headlines are saying and then some of what our research says around this. So you can see here are some of these headlines that people are showing us. Stock market heads for a new high. Its foundation is starting to crack just 1 hour ago. Stock market today, stock market news and analysis, individual investors warming to the rally as stock markets touch new highs. So we went back and we looked at average annualized returns after new market highs from 1926 through 2022. And what we found is that if you look ahead after we hit those new highs, 1 year ahead the market was up 13.7%, 3 years ahead the market was up 10.6%, and 5 years ahead the market was up 10.2%. But what if you said, well, I want to wait till there's a market correction before I invest? Well, we looked at that data too, and you can see average annualized returns after the market decline of more than 10%. So the S&P 500 from 1926 through 2022, 1 year ahead, if you invested after that 10% crash, 11.4%, 3 years ahead, 10.3%, and 9.6% 5 years ahead. Here's the point. Becoming an investor means you have to be willing to invest for the long term. It means you have to be disciplined and you have to accept that there's going to be ups and downs and not get all caught up in the headlines where the media is trying to tell you, hey, the market's way up, so this isn't a good time to invest, or the market's down, so this isn't a good time to invest. Instead, stay disciplined. Be broadly diversified across asset classes, sectors across the entire globe. If you're nearing retirement or in retirement, make sure you're rebalancing your portfolio to be able to buy low and sell high. That's essentially what you do when you rebalance. And then another thing, if you're just getting ready to retire, you may consider investing your money across time segments. So money you need in the short term is money that's going to be more conservative. Money you don't need for a long period of time can be invested more aggressively.